What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Tuesday, everybody. With just weeks to go before Chinese New Year, also known as Spring Festival, one of the largest migration events in the world, and the Winter Olympics in Beijing, China's zero cases policy is facing its biggest test yet, with hundreds of cases scattered across the country and what looks to be an Omicron outbreak. Let's start with Tianjin, the northern city of 14 million people, a few hours from the highly sensitive capital of Beijing, which discovered China's first local cases of Omicron. On Monday, yesterday, the Tianjin municipal government reported 31 local transmitted COVID-19 cases and 10 asymptomatic ones. As of 3 p.m. Monday, about 75,000 people have been put under quarantine in government facilities. Li Hongzhong, party secretary of Tianjin, expressed, quote, "As a traditional guardian of Beijing, we must shoulder the responsibility of protecting the capital from the virus's attack." End quote. According to state media, local officials, in an attempt, it seems, to avoid the embarrassing mistakes that Xi'an's government made with acute food shortages, have mobilized major wholesale suppliers, supermarkets, and vegetable markets to add inventory to cope with the demand for meat, eggs, and vegetables. But it looks like Omicron may have already broken out outside of the city. 2 patients in Henan province's Anyang city were confirmed to have the Omicron variant yesterday. Anyang is not next to Tianjin. In fact, you need to cross through an entire other province to get there. The city, with a population of 5 million, began citywide testing and imposed strict COVID-19 prevention measures yesterday, such as stopping outbound railway, bus, and taxi services. Then today, Tuesday, the city announced a full city strict lockdown like we have seen in Xi'an. Tianjin has still not taken this option. They are still not under a full lockdown. They are only under a partial lockdown, but this may change soon. 20 minutes ago, as I record this, Tianjin announced cases have now hit 100 total in the city and are being discovered in multiple districts. Meanwhile, Shenzhen, which sits between Hong Kong and Guangzhou, aka Canton, at the heart of the economic engine that is the Pearl River Delta, discovered another 4 cases yesterday. So we can see that the complexity and the cost of trying to maintain a strict zero cases policy is skyrocketing. So far this week, several locations have called on people to not leave during the upcoming Chinese New Year celebrations, including Beijing, Shanghai, Tianjin, the central province of Henan, East China's Zhejiang province, South China's Guangxi province, and North China's Inner Mongolia. Meanwhile, in the Hong Kong Special Administrative Region, Beijing has demanded that Hong Kong's Chief Executive Carrie Lam, quote, take swift action, end quote, against Hong Kong officials who attended a big birthday party, breaking restriction rules during a major outbreak of COVID. All 214 attendees of the birthday party, were initially ordered to do 3 weeks of quarantine at a special facility. However, after the discovery of a false positive, some, including 11 officials, were later released. However, these 11 officials are still required to self-isolate at home for nearly 2 weeks. And speaking of Hong Kong, that brings us nicely to our next part. This week it was announced that Beijing has appointed former People's Armed Police Chief to Xinjiang, Peng Jingtang, as the new commander of the People's Liberation Army's PLA garrison in Hong Kong. Hong Kong-based South China Morning Post quoted a senior-level source as expressing, quote, "The new appointment is part of leadership reshuffling and special arrangements before the party's 20th Congress, because the situation outside China is volatile." End quote. Peng will be in charge of the People's Liberation Army garrison, which is maintained in the Hong Kong Special Administrative Region, though it largely keeps a low profile, with Hong Kong police maintaining law and order in the city. However, state media speculates that perhaps the People's Liberation Army garrison will play a more active role in the future, with the state-run Global Times writing today, quote, "The main target of the People's Armed Police is to deal with terrorism and emergencies, which is not only a major mission of the Hong Kong garrison, but a problem of primary importance facing the current Hong Kong government. End quote. And next up, yesterday, Monday, respected Chinese economist and population expert Ren Zeping published a widely shared and controversial piece online with a series of recommendations to prevent China's population collapse. One idea is 2 trillion RMB, approximately 310 billion US dollars, in subsidies every year to encourage new births. In the piece, Ren observed, quote, China's fertility rate fell to 1.3 in 2020, and it may have declined further last year, possibly to about 1.1. That is far below the 1.6 rate in Europe, 1.8 in North America, 2 in Latin America, 2.4 in Oceania, 2.2 in Asia, 4 in Africa, and 3.6 in Muslim countries. The high parenting costs and skyrocketing house prices are the 2 main factors behind the low fertility rate. Cutting costs and establishing a fund to encourage childbirth will help to stabilize the situation in the long term and will also help to optimize the structure of the population and lift the long-term potential economic growth rate. End quote. It was argued in a separate piece that this subsidy could result in up to 5 million additional births per year. Not only is this very optimistic, critics believe, for example, that a more likely number is 500,000 to 1 million max. It also still is not enough to sufficiently reverse the rapid aging that China is sliding into. Next up, a couple of key economic and financial developments in China. Quickly, if you're enjoying the episode, don't forget to hit the like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. As we expected, in the face of economic slowdown, Beijing has confirmed that it will be bringing forward key projects from the so-called 14th five-year plan in an effort to stimulate the economy. Not only was this hinted at during the Central Economic Work Conference in December, which we covered at the time, but we also know that this is the same playbook Beijing turns to again and again when it needs growth. According to state-run Xinhua Media, a State Council executive meeting chaired by Premier Li Keqiang on Monday said that relevant authorities should speed up major projects with quote-unquote solid measures and quote-unquote in an orderly fashion. The meeting decided on the local level, China will put into use an extra 1.2 trillion RMB, about 188 billion US dollars of local government special bonds issued in the fourth quarter of 2021 and accelerate the issuance of front-loaded 2022 bond quota. A readout from the State Council meeting observed, quote, as the Chinese economy is in a critical period, the country should give higher priority to stabilizing economic growth, continue its strategy of expanding domestic demand, and take targeted steps to boost consumption and investment. End quote. In a move which is hoped to provide more private capital to finance China's expensive and already highly indebted high-speed rail network, China's first public-private partnership-owned high-speed rail line began operations over the weekend. This has been launched as part of Beijing's larger push to encourage more private capital to invest in infrastructure, including the high-speed railway network, which is the largest in the world. The 266-kilometer railway links the city of Hangzhou, the provincial capital of Zhejiang, with the coastal city of Taizhou, also in Zhejiang province, but not to be confused with Taizhou of Jiangsu, and the railway will cost a cool $7 billion. And last up, Evergrande. Yesterday we discussed the increasing evidence that Chinese state-owned enterprises are looking to bail out distressed property developers by buying assets at above market prices. We have more details on these developments today. A media platform affiliated with the state-backed newspaper Securities Times today confirmed that China is indeed encouraging state-owned property developers to buy assets from stressed rivals. The southern Guangdong provincial government summoned several developers to encourage deals between indebted developers and state-owned companies. Over the weekend, in yet another surprise for markets, Chinese financial media outlet Caixin Media reported that Shimao, who had been following for some time now, had put all its projects, including both residential and commercial properties, on sale. Then, Shanghai local media reported late yesterday, Monday, that this was the case and that the asking prices were well above what a distressed seller would normally get, with commentators expecting an SOE or large state-affiliated or influenced private player to purchase the assets. And indeed, Shimao Group Holdings Limited shares jumped in Hong Kong with the news that China Vanke Co., Vanke for the English version of their name, a Fortune 500 company, is in talks to acquire assets from Shimao. However, then today, Tuesday, in a filing to the stock exchange, Shimao denied reports saying that all projects had been put up for sale, but that it, quote, may consider disposing of certain properties if the terms and conditions are appropriate in order to reduce the indebtedness of the group, end quote. Meanwhile, China Evergrande Group said on Monday in a filing that the voting period for bondholders to vote on proposals, including one on delaying the redemption date of some bonds, will be extended to January the 13th, this Thursday. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.